Hi everyone, Happy New Year. Welcome to our first official Learn, Grow, Invest meeting for 2022. It is definitely good to be with you once again. My name is Jermaine. I'm one of the co-founders for Learn, Grow, Invest. So we're a Bible-based investment community focused on financial education and literacy. We do sessions like this to talk about the stock market, talk about investing, and this is going to be another good one. So the title is Stocks to Watch. So we're going to do, me and my friends here, we're going to just go over some companies, talk about what we like, what we don't like, and what things we're kind of looking for or expecting to happen throughout the year that may make it a potential pick for the year. So it's just going to be a discussion, and I have to say before I go any further, let me just get that disclaimer up. So the information reviewed here is for discussion, education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell any stocks that we will mention here today. This is just for our amusement, right? So we recommend you speak to a licensed financial advisor first, which none of us are at the moment. So as customary here, we're going to start with a brief word of prayer, and then we'll jump into it. So Lord, thank you so much for bringing us to see another year. I pray as we discuss the business of investing in stocks that you'll give us wisdom, discernment, that we'll be able to build wealth for our families. So Father, bless this community in Jesus' name. Amen. All right, guys, I'm going to ask you to do something first for me. Please like this video, right? Because we have a history of a whole ton of views, but no likes. So please like the video. Please take a brief moment and like the video, and tell us in the comments below before we get started, what stocks are you watching? Give us your pick for the year, which stock you're betting on to do really well. And we'll just kind of revisit them, at the end of the year and see how well you did. So let me bring on some friends here. We have Chike. How are you doing? And David Rose. How are you guys doing?
I'm here. I'm just give me a little lag for a second, but that should be good.
Yeah, man. You seem all right. All right. So we're just gonna jump right into it, guys. You know the usual format. We've done a couple of these before. So David, you wanna start us off?
No, I'll let Chika start us off. I just woke up, so I literally just woke up after an hour of sleep.
Yeah, man.
So please give me a second to compose myself.
Yeah, man, no problem. All right, Chika, start us off. What do you have in mind for this year?
Well, let's go. You guys, everybody knows. Well, first and foremost, glad to be back another year, 2022, with the Learn, Grow, Invest team. We got big things for this year. So, and I'm hoping that as investors, not just stock alone, we do very well based on everything that's going with the markets and stuff like that. So, I would prefer then, before giving any of my picks that as I normally do is customary. They are not the backstory, but the background that I'm going off of. So basically, everybody knows what we've been watching. If you're that avid investor, you've been watching basically supply chain prices, inflation, etc. Those are the two main big topics that are affecting us. So whatever affects the United States, they sneeze, we get a cold. So pretty much for me and the companies, and I'm going to say this is blunt, so everybody can forgive me, but I'm pretty much looking at the companies that their prices, they just have to increase their prices to maintain their margins, etc., and keep doing good. But at the same time, it's going to hurt the consumers. If the competition is not there, you're going to just have to keep buying, and you're going to cut back somewhere else. So what am I focused on? Food. That's my biggest thing, or my biggest set of play, like watch topics this year.
Which food? I'm curious. Is that DTL?
So I don't hold. Some I hold, some I don't anymore. So I still hold Seprod. And I still see that as one of the, if everybody goes and looks at what Seprod does in terms of all of the products that they produce, manufacture, distribute to Jamaica, and also where they get their stuff from, you'll see that like an octopus, their tentacles are pretty much everywhere, and they're a big company. And now that we have the fire behind us, and everything that happened with that, and hopefully we have their payout in short order to continue the expansion of their warehousing, etc. Yeah, everything that they do, all the products that they do, I expect them to be the one to show some good signs of not necessarily recovery, but just getting back on their feet based on the fire. Because let me put it this way, as we say, connect the dots, right? I remember going into PriceSmart over the Christmas period, well, just before the Christmas period, and the time before that, like 2 months before that. When that fire happened, I couldn't find any of the milk that I wanted. None. It was done. You couldn't find that milk easily and that's one of their biggest things. They make Miracle milk, they make they distribute Miracle and Surge Island in, and I think they did Nestle as well too. But the primary ones on the thing is Miracle and Surge Island. You couldn't find nearly any of them that were there at some point in time. It was difficult, especially the ones, not the full cream ones, but specifically for those who are all health conscious and so forth, are you vegetarian or whatever, the ones that were lactose free, low fat, etc. Done. Like I couldn't find it. Right? It was out of stock most of the time. It's coming back though. I recently went there and I saw more. So if I was to just gauge how I'm looking at stuff off of my PriceSmart shopping, it's found there. I found it more in the supermarkets than I found it in that bulk manner in PriceSmart. So Seprod is my first.
What point was the fire? The fire was in October, because I don't remember, because that's where I'm seeing a drop off here. When was the fire? I think David probably remember.
October 6th.
October, yeah.
There we go.
So
of course
I mean, since the fire, it has been trading between. Just let me not count that initial day. It's been trading between a high of 65, low of about 61.
Actually, you have to count. No, you have to count that initial day. Why is that so? Because it's a good teacher. It's a teachable moment, because the day that fire happened, all of us basically tried to capitalize on getting that same dip that is down there.
Of course,
so it's a teachable moment for everybody who are investors that believe in a company, have done their homework. That was the perfect opportunity for those who felt skittish, decided to exit, and for those who knew what they wanted to have and got a chance to buy it. If you got a chance to buy it, that was a good upside.
The truth is, I'm not seeing a big exit here in terms of volume from the fire. I mean,
no, you wouldn't expect that from large holders. Just from the regular persons who are quote unquote shocked or surprised,
skittish.
Skittish. Yeah. Yeah. I mean, 733 million units, and on that first day, 80,000 units, 70-something units, and then the rest of that is just like normal trading volume, I imagine.
That's right.
So yeah, okay. So that means most of the shareholders are pretty much saying they're not concerned.
Of course.
So
I'm definitely one of them, and I've seen it when it dropped back, it dropped down, and then it came back. I was like, okay, all right. Well, I mean, if you're going long term, you know what they were gonna do.
Yeah, so I unfortunately had to exit my position to purchase real estate. So I shared that, with you guys recently, that I would have acquired some real estate. So Seprod was one of my holdings that I would have sold to be able to do that.
Congrats.
But thank you, because I was holding my average price for it was about $37, I think. So I mean, I'm still happy with that.
Yeah, you went in, made a change, and you invested in something else. And in the game, investing is to make more money.
Exactly. So that's actually the point I was gonna make, because I mean, I say all the time that people sell stocks for different reasons. You don't have to. I mean, people need to sell to be able to live. So. All right, cool. So I'm just looking at the report for Seprod here. So we'll note that as Chika's first pick. David, you ready to go?
No, I agree with Seprod as well.
Okay. Okay.
So that was was one of my picks for last year. And here's the funny thing about it: if Seprod didn't have that fire, they'd have probably been in the year higher in the position of their stock price. But end of the day, Seprod only declined by 0.22% for the entire year. And I'm pretty sure the company's dividend yield is higher than the companies that declined their stock price last year. So that is just a teachable moment as well, if you get what I'm saying.
Yeah. I get you. Oh, so I was waiting for the financials that would include the fire. So that would be next February. Well,
No.
When would that be?
Wait, they actually released their Q4 and audited. So February 15, we're going to see a nice write-down in their financials. Yeah, going to see a write-down.
Okay. All right. But yeah, I mean, leading up to then...
the thing is, the additional costs we're seeing from... once again, the additional costs that we were seeing coming in from the increase in commodity prices, that was hitting them still, but at the same time, the fact that they were relatively maintaining stability says a lot, because as you can see right there, companies' overall revenue went up, but as you can see, direct expenses really crunched them. And Seprod showed that, for the take out the one-off gain from the distribution facility in 2020, and when we're 9 months versus 9 months, you realize that Seprod would have, in effect, been just done 2% in net profit. So that's showing that the company did not pushing on all the price increases over to the consumer. I never said not pushing increases on all per people. I said not all of the increase onto consumers.
Yeah.
They're still maintaining proper operations. I think if Pando here, that's thumbs up, because as you can rightfully see in the third quarter, they basically almost have all the operating expenses. So, and the thing is, they refinanced their bond during the year from the $1.6 billion bond and refinanced it for another 10 years. So that is 10 years on the road right now. So they're going to pay about $5.2 million less each year in interest expense. So it's already going to impact income statement and already going to be good for the balance sheet. So that company is that's about a capital liability for another decade.
Okay. So I mean, do you think they're shaping up to? So I mean, I guess based on what you're saying, David, and he actually, this is something that we've discussed, the three of us, before. I mean, we figure that some of those increases are gonna be rolling out. I guess
they have to come eventually. They have to come eventually. That's the reality.
Yeah.
The companies can contain it up to a point, but they can't hold it up forever. They're not our parents.
Yeah,
that's what I'm saying.
So here's the thing: as a consumer, you don't want a company to raise their prices. As an investor, it's in your interest, right? So yeah.
No, so the thing for me is that I put Seprod last year because tourism stocks were in the best performing stocks last year. I did not let a person to come into the new year, especially with how we didn't know what things to play out, because as I said later in the year, Omicron has to play out. So that really showed that that kind of prudence would have paid off in one sense, because we need tourism, we can't discount that. But at the same time, you have to be very cautious, just because you really don't know how things are going to play out in the coming weeks.
David, you know what this difference in payables was? Right here, what led to that increase? That 1.9.
So I'm not sure, but
that's a good thing, by the way. That's a good thing, actually.
That's a cash out. That's a cash outflow in the sheet, which means they pay out, pay payables down.
That's right. So I'm sorry if they're paying down their maybe they're doing it early. I mean, we can check the If maybe we can
And
see it inside.
for those wondering how to interpret the balance sheet, can you go back a little further, zoom a little further, so they can see the current liabilities, Jermaine?
Okay,
Go back
yeah,
down.
that's
Here
actually
it
where I
is.
was heading for, but I wanted to just let them see what is what. So this is 2020, and this is September 1st column
9
is
months.
2021, second
Yeah.
is 2020. And let me zoom in somewhere here. All right, so this is the payables line here.
All right. So no, zoom out. I said not zoom in.
Oh,
I want
okay.
it to person still to. Can you zoom? Can you just scroll up now? Can you scroll up to more so they can see the dates? Say that's fine. So for those who don't understand, like how we were able to tell that I was able to tell it was a cash outflow without actually looking at the balance sheet immediately. So for those who don't understand, the December 31, 2020 to the extreme right would be the company's
Financial year.
audited financial year, and September 30th, 2021 would have been the most recent period. So the way it works is that if assets go up, you see that change in the balance sheet depending on where it happens on the line items. So in the case of cash, if cash goes up, then you see cash go up on the cash flow statement. If you see cash goes down, it means that cash left the business. So in the case of payables, if liabilities go up, your assets go up. So whereas the payables right there, it was at one point almost $2 billion decrease in payables. I said almost 2 billion. That's not the exact amount shown on the cash flow statement,
Yeah,
but just so you know. So like the thing is, if you look at the balance sheet alone, or even look at the income statement or the cash flow statement, you can interpret certain things immediately without having to guess anything at the same time. And that is
yeah,
based on the changes in the assets and the liabilities. And as you can see, the company has has increased inventory relative compared to year over year, meaning September 30, 2021 to September 2020. The 7.43 billion to 6.2 billion. And they basically said, hey, supply chain disruptions are there and we need to stock up just to ensure that, we have enough on hand to protect ourselves. That is the reality.
Yep.
And
$2.2 billion basically.
And then I was going to point out as well is that you're seeing that the company's payables have marginally increased, which isn't a bad thing because for any business, by the time you have a reporting, some persons have a different credit schedule and it's going to show up different. And the good thing is once you're cutting that receivable balance, then all is well.
yeah. All right, so I'm just gonna scroll through. I'm gonna keep scrolling through while we're talking to see if there's anything else that that catches my eye. But since you both are saying separate, I'm gonna have to say something else. So somebody was saying that Peter was saying that he wants us to talk about some dividend stock, but I mean separate is a dividend stock.
Separate is a
Isn't it?
dividend stock. As a matter of fact, it's a good
No,
one too.
so I don't plan discussing dividend stocks, but the reason why I don't mind chickens pick as well, but at the same time, there has to be a balance between dividends and capital growth. And
Exactly.
remember we were going to stock take for last year, Jermaine. I know
Yeah.
most of the companies are basically aligned to have less correlation to certain levels of risk, just because you never know what's going to happen, because we're still
Yeah.
in the real risk or scared phase of COVID. So some of my portfolio selections last year were mainly, and these were all these like trading for the year. These are the besides publicly announced in the Observer. I mean, it's where like companies in manufacturing or companies that when they're really correlated towards particular parts of the economy. So like your L.E.A.R.N, your Pulse, your Seprod, that all of them did extremely well, but at the same time, I was a list of stocks I was looking at. I didn't invest in all these companies, and the companies that you're choosing to invest in during the year did pay off. So actually, the reality right now, it comes down to investing during this environment. You have to be a little more prudent
Agreed.
overall. This doesn't mean that you shouldn't invest. It means you have to be a little more prudent depending on what you're going to buy altogether. Just because you don't know what's going to happen. I remember Seprod at a high of 75.80 last year before the fire. And remember, they were at that price before COVID. So
that is correct.
That kind of shows you that, persons are looking to particular safe haven stocks in any given event.
Yeah. So Seprod paid dividends 3 times last year, Peter. So I mean that's
I'd
not
also read
bad.
them up and take it from the price that you would have bought it at.
Yeah.
So suppose you were
exactly.
able to get it. Suppose you were able to get it at the $53. No, this is where it doesn't. It might not sit nice with persons who understand the dividend part. Now, dividend yield. It's not about the price, but it's about the yield. And dividend yield, more importantly, has to be compared against such indicators such as inflation and the interest rate being offered by the Bank of Jamaica on certain other securities, such as their debentures, which are known as their bonds, also their treasury bills, etc. So put that back up again, Jeremy. What was it? Three. When we add the three of them up, how much do we get?
$1.30.
$1.30. Yeah, this is not going to be much of a dividend yield if you're going $1.30 and then you were able to get it at the dip, which was it went down to what was it 53? Was the dip at 53?
I think it was call it 54, 53 thereabout.
All right, so round it off and then times that by 100. That's 2.4% for the year.
Yeah. What I mean, the best dividend yielding stock on the market is what?
Carreras.
Which is how much?
10%.
10%? Okay.
10.54 actually, if I'm correct. Somebody can challenge me on it. I might be wrong, but
well,
based on what I have,
you would know more than me. I mean, I've said it before. Carreras, SVL, those are companies I personally don't look at. So I mean, when it comes to dividends, I look at every other stock except those two. But those are personal choices, to each his own. So, all right, I want us to move to. I don't want to spend all day talking about.
Attractive for religious reasons, but at the same time, they give their shareholders the return they want.
True. Actually, funnily enough, unless I'm wrong, based on this document, it's a battle between Carreras and Caribbean flavors. That's Caribbean fragrances. Yeah.
All right, so we're gonna say, David, your first pick is Seprod as well.
Yeah.
Okay.
Well, staying on tune. So I would have said to Peter and to everybody else there, they might have wanted something that so Seprod might be would most likely be high for the starting investor, right? It's now $60 odd. The lowest was 50.
What do you mean? How would that be high?
Because they can't get that much units. People want units.
I think he's talking about the nominal value.
Yeah, right. And people might want more units.
We're not subscribing to that, right? We're subscribing to companies that have value regardless of price. So it's our stocks to watch, right?
Okay, well, I'm just gonna go my next one on the low ball end in terms of the on the lower end of the spectrum. And if I am correct,
do not say Wigton, by the way. Do not say Wigton.
Can I have my next pick while Chica figures himself out?
My theme is against food. I already said that. My theme is food. My next pick is going to be honey bun.
Oh,
really? No. Okay. All right.
No, I have to respect the choice because they've done pretty well for themselves, considering that there's been no school since COVID really started. So I have to give.
What did I say? You don't have a choice. If you need to buy food, you either go to the competition, and if you can't, if there's no proper competition,
that's not necessarily essential food, though, right? That's more of
your kids are at home.
Not all of Honeybun's products are quote unquote pastry products. I have to differentiate right there, Germany. Remember, they also make bread. They also, make the little rum cakes, and also, the little cinnamon rolls. The different products that people have. They have the raisin bread right now. So not all of the product is quote unquote essential, but at the same time, it will fall under the basic.
Let me search for them. All right. So full disclaimer, I haven't looked at them personally, but that would be interesting to see. Where are they now in terms of their financial year? What next statement is due?
No, it came out already. The financial just came out already. It was September 30.
Okay. All right. Let's see what they look like. All right. So Chika, since this is your pick, Keep talking. Tell us why.
Hold on.
Audited
So,
journal. Just, so open the page. Open.
like,
Right click. Audited financials. No. That's audited financials. Remember, audited report. Annual report is due until the month end.
Yeah.
Not
Alright,
that.
do I
That's
have-
not that.
Wait.
That's a shareholder profile. That's what I was saying. The next link. That's why I would just.
Okay.
So
Thank you, sir.
when
Thank
I'm
you, sir.
speaking, just take note.
All right. Fair enough.
right. So, under my calculations for Honeybun, so in their 2020 year, I'm not even going to use 2021 yet. So the 2020 year, their balance sheet and all of the indicators backing it was
All right.
just
You
absolutely.
want to share your screen?
Hold on a second.
Yeah, man.
Hold on a
Share your
second.
screen. All right. So
Try.
while we're waiting on that, let's see what some of the picks in the chat are. So I see person saying RJR, person saying Lombo, Fesco. I see a pick for Honeybun as well. I see GK and Lance is saying Seprod is a good pick. Dolphin Cove. I've actually wanted to review Dolphin Cove, so I'll probably add them to the stock review list.
All right.
Maybe
One day,
reinvestment.
so
I was there. I was there recently.
VML.
I was there recently, so I can actually speak to that.
Okay,
You
awesome.
saw the Dobson article last week. You saw the pictures.
No, I haven't
Of Dolphin
checked it out
Cove?
yet. Share
Yeah.
the link with me. I'll check it out.
All right, let me just share the link, but at the same time,
GK,
let me
ready?
just-
Everybody
Share it through?
should be seeing. Oh, they're not seeing it yet. Okay, here we go. I'm sorry. I thought I was sharing it already.
Yeah. Wait.
Everybody see
yeah,
no?
I think you are. Yeah. I'm
Right.
having too many screens up here.
So everybody
Can you
knows.
zoom
So
into that, sir? Zoom into that so we can see clearly.
I haven't chucked 2021 as yet. Well, full disclaimer, I don't own Honeybun as yet. I'm pretty sure I'll pick it up at some point in time though, because this is a good company.
You hear that, guys? As yet.
Yeah. Why I say as yet? Because for my stuff and my ratios and stuff that I was using, this is their balance sheet section, and they were lighting up the board in green, basically, for the prior 2 years, right?
Okay.
And if we now you have up the when we go back to the financials that you have up now for 2021, you will see that it has been much of the same, and all of that is against the backdrop of COVID. All of that is against the backdrop of no kids being in school, etc., and they are still doing pretty well. And why I picked them, because as I said, first and foremost, I went large with Seprod based on price. I go small now with Honeybun based on price as well too. Honeybun is at a more affordable. Well, this is not the
You're
market
not wrong.
price.
You're not wrong, Chike, because according to the JSC statistics for last year, Honeybun was one of the best performing stocks. It went up 74.58% last year.
Correct. So, I mean, as I said, and everything about them that I watch, like their company growth rate and so forth. I look at cash. Everybody knows I love to see how much cash you have stashed in, especially with respect to free cash flow versus, and that goes against your sales. They were also lighting up my board of things that I look for. So for me personally, sticking on the theme with food, because where we are with inflation and stuff, they are my second pick firmly.
What's SGR, Chike?
Sustainable growth rate.
Don't even try to figure out that sheet, David.
Don't worry, I don't mind.
They would try to figure out that sheet.
Look at the link I sent in the chat.
Yeah, man.
So-
I'm gonna have it brought up.
Their dividend yield, though, we need to. I mean, asking as a dividend stock, though, I would love to see them pay a little bit more. But
Chike,
this was 2020.
Chike, be real. You're talking about a manufacturing company that is paying out high and high each year, but under a stable, conservative situation. So you cannot really kill them, to be honest.
It's growth versus dividends, right? So I mean,
True.
I don't think investors will be complaining. How much did they grow last year? Like 90% or something like that?
But the stock price?
Yeah.
74.58%.
Yeah. So I mean, a 2 or 3% dividend versus a 90% increase in stock price. I think
Good
investors
capital
are
gains.
good with that. Yeah.
Good capital gains.
Yeah, man. All right. So David, you adding anything for Honeybun? How you feel about them?
No, there was one companies I actually mentioned to somebody recently, just because me and I were discussing it, and I was saying that's what a company I really like, just because the reality is the tax break is up for them, like a couple of dream market companies, and
Mhm.
they're doing pretty decent for themselves even without a tax break.
All right.
You're
All right.
talking about the
So
company facing higher, they're not facing the same variables as everybody else, which should have
yeah.
been commodity prices, shipping prices, and the lockdowns, impacting distribution schedules along with no schools and tourism somewhat being a little fizzy. But the fact that they've look more towards the distribution side of the business and focus more, just building their product line is pretty good. You cannot disrespect a company that
All right.
has continued to grow on such a strong backbone.
All right. I mean, so I'll check it out. So here's the thing. I added them to the stock review list last year. It was getting some good votes. I thought about looking at it. I haven't done so yet. But since you both are bullish on it, I'll definitely check it out. So David, who is your second pick?
I was gonna say Fesco.
Yes.
Not necessarily. No, no, no. So,
Interesting.
so, so let me break it down.
Interesting.
Let me break it down. So,
Interesting.
so let me break it down. So, remember Fesco, and
Interesting.
and that's our comment on today. And I need to clarify for persons who don't understand how or what Fesco is. Fesco is a marketing company. They just, and the emphasis on the word just, opened their first company operated company operated
I'm trying to remember the
company
name for it.
owned gas station, Coco.
Okay. Company owned, company operated. Yeah.
Yeah. So for those who don't
Okay.
know, all the fiscal gas stations are Dodo, which is dealer owned, dealer operated. So there are four types of operations that have in the gas industry in terms of selling the gas. So
Mm-hmm.
you have company owned, company operated, company owned, dealer operated, dealer owned, dealer operated, dealer owned, company operated. So Fesco just got their first, Coco added to their balance sheet basically, or
Mm-hmm.
added to their income statement. So you're gonna see a better performance going forward on that tune. And since they're getting their listed back in April, when you see their results come around May, you're gonna see an improvement on the bottom line net profit, which is what most people are interested in, just because the tax won't be there in that situation. Because fiscal less than probably I think what less than 10, 15 employees before they open a gas station, and the reality is we are seeing a continued hike in gas prices because just today, Petrojam increased the add-on to 87.99 gas to the tune of $2.13. For
Okay.
the average person, they're gonna say that's not much. But for the average person who's driving now, who actually owns a car and sees the prices, like they're like, "Why? That's kind of rough,
Yeah.
Because
So I guess it's a similar thing we're talking about with food, where the price increase kind of benefits the company, leads to more revenue, which should lead to more profits, right?
Correct. Correct.
well,
Yeah.
it does just because of
If
the
the
nature of
comp
the business, and they just added the cocoa to their lineup. Because the thing is, they're going to have low net profit margins, but on the flip side, Fesco benefits from this nature of their business because it's a commodity based business. So because of that, they are always going to benefit from higher gas prices and benefit from lower gas prices on the flip side, because it's either the case whereby people still have to buy the higher gas to go with the business and schools open again along with everything else in the country, or gas prices go down and we're buying more gas and drive more.
Mm-hmm.
So there
their
it's
Okay.
a
dealer own their dealer operations, though, the biggest thing for me personally, from a value standpoint, is I use the term often, so people understand it best. It's a Buffett
Ha-
term,
Have,
economic
have,
moat.
have you checked out this yet before you go there, Chica? Have you checked out the dividend policy?
Yeah,
Did
they
it?
so,
Twenty-five
so,
percent.
so the thing is, in their prospectus, they said they're looking to do 25%,
That's
20 or
right.
25% annually. No, they're saying
Mm-hmm.
they're looking to do semi-annually, which means that based on their projections, that their cash flow will actually improve to the point where they can potentially consider a biannual dividend, which
Okay.
Is
isn't
it gonna
bad.
be? The question is it gonna still be 25% per year, or is it 25%
That's what I was
biannually?
just about to ask.
Per
And
Because
what?
25% on net profit attributable to shareholders yearly is a big difference compared to net profit, compared to 25% twice per year on net profit attributable
No,
to
no, no,
shareholders.
no,
I
no.
think
So, no,
I think they'll split that. I don't
I
think
think
it'll
what
be
they do is right. Is
25%.
they'll
Yeah.
keep it as 25%, but they'll split it. They'll pay it twice instead of
Yeah.
just once
no.
per year.
So the thing is, I'm gonna let me just clarify right there. So remember, companies have a dividend policy and need to be respective towards their, for one, expected profitability for the entire year and other considerations. So, although they updated it to be semi-annually, I was going to say it's more like a 25% relative towards their overall performance in the year because Sagicor and JMMB do semi-annually dividends and they're based every 6 months of their 6 months performance. So after Fesco did this first 6 months, they're like, all right, we're not, so they earn a penny, right? They probably pay 0.025 as the dividend for that period, and then you earn another penny for the other 6 months, another 0.025. So sorry, point 0.0025, I should say. That's the correction. I
Right.
should have. But I guess I'm saying with
Okay.
GK. So 'cause the
Yeah.
thing is, your companies like Lab, where they have so much cash coming onto the business related to what they can do with it, that they actually pay special dividends, to, which basically shows that they have that much extra cash to pay out their dividend policy.
Fair enough. I always had a problem though with Fesco and that what we're right now discussing, which is that they're low net profit margin, basically extremely low. Because after all the money that they make, it basically just dwindles down to only $100 odd million that they're making. So
No, but the reality is, what do you want them
And
to
so,
do? Gas station,
so
it's a Jamaican problem. It's a nature of the business situation because in
true.
the USA, it's the same thing, which is where you see gas stations always try to mark gas. Sorry, you always see gas stations and even the dealers try to find creative ways to improve their overall income or earning profile. So for the gas
Which
stations, it's like charging higher goods in the convenience store, and Fesco is teaming up with Mr. Breakfast to add that option to attract more traffic to their the gas stations that have their brand, and then on top of
all of
that,
that,
Fesco,
no, all of
is
that,
investing as well. So
right? So all of that came back to what I said at the start before when you mentioned it, economic moat. The biggest thing for me in that is that you could have put the gas station with all that stuff, and it could never generate income like that. However, Fesco's gas stations are extremely very well strategically placed. The ferry gas station that just went up there, so
yeah,
that with the
I
Mr.
think
Breakfast deal,
you
that's
mean
big. In my opinion, that's
this one,
big.
no,
this
Chike,
one you're
Yes.
talking.
you mean core? You mean core? Whether the founders and the directors were strategic because I want to be clear to people. I don't want people to get confused. You have to remember there is company owned, company operated, dealer owned, dealer operated. The Gaston and
Right.
Ferry was not a decision of Fesco per se, but it's a decision of the person who actually owns it, which in this case is Mr. Core himself. And for Jordan in the comments mentioning about Fesco looking to cooking gas, Fesco said in their prospects that looking to do cooking gas, own brand of water, the supermarkets as well, and those other partnerships. So they have multiple avenues they can take to improve the earning profile. But at the same time, I get what Chike is saying, which is that the business itself does not give them that much room to actually expand their income, their earning potential. I get that. I might get disrespecting at that point, but at the same time, we're talking about
There,
an
there's
inflationary
there's
environment.
another thing Chike were watching as well, which is mentioned a couple of times in our WhatsApp group. Is he thinks that it's overvalued? Do you still feel that way, sir?
Let me tell you in a
Because
second.
you and Andre were kind of curious about that. What's a PE now?
I was saying that based on what I was pulling. Is it still overvalued? Yes, it is.
I'm checking it out now.
Which company?
Yes, it is. I mean, the P calculation is still about 46 times.
Yeah.
And the price to book is up 11 times. So that puts my margin of safety at 532. And my margin of safety threshold stops at 22.5. So, no. Additionally, though, reasonable price reasonable price, yeah, it's gone way above board. But you know what? To be very honest, I will be challenged. I'm sure everybody will challenge, or those who are learned would challenge me and say, how can I say that without basically giving context to their competition and who's out there to challenge their industry profile, etc., and their potential growth. So henceforth, as David rightfully says, if there is going to the calculations have been done, if their potential growth is X, then it's not undervalued by those standards of whatever model they use, whether it was discounted cash flow, etc. It ain't dividend because they haven't paid a dividend, so it's not dividend
Yeah.
discount, dividend discount model. But if they discounted cash flow, etc. But
Okay.
for me, fundamentally, PE wise to price the book, they overvalued.
But
Yes,
Chike,
they
but
are.
Chike, you're saying about it. Your person said Fesco is overvalued, and people make money. People make money off of Fesco. So
Exactly,
that's
because it's cheap.
but
That
no,
was the
but that's
thing.
the thing about Chike.
So
That's the
you
thing
think
about it. That's the thing
you think
about it.
that's
You
just based
have
on the
companies that
nominal
will.
price?
You have companies that will not
Of
make
course it was.
no. So Chike, your companies that would not make sense based on what you would call a fundamental online standpoint. I agree with you. But at the same time, if money can be made, why are you going to ignore it?
Well,
Look,
I mean,
to move
start.
from $1 to $2 is 100% capital
From
gain.
$1 to $3.50 is just 250%.
200. Thank you. And and this is simplistic thing we're talking about. It's cheap, so
So
it was
I guess
cheap, and people moved it.
I guess the question is, do we think they're gonna have a similar year to what they had last year?
But Germany, remember, you're talking about the fact that okay, so they listed in April. Your financial year ends in March, right?
Mm-hmm.
Unless the prime minister decides to really shut the country down again, like
It's not
Australia
happening.
style
It's
or
not happening.
Cayman
No,
style.
no,
No, no,
that's not
but
likely to
I'm
happen
being real.
again.
I'm just giving a worst case
Yeah, the
scenario.
scenario is worse. Yeah, the worst case.
Then you can get worried. But at the same time, remember, as I was explaining, you're talking about the company, having that benefit of the tax break coming through from April to now. So when you compare it against your 2021 financials, it's going to look good. And for the rest of the year, you're talking about a business comparing itself without their Fesco their new company incorporated gas station, along with the fact that there wouldn't, if there was no more lockdowns, then that's another boost to them.
Fair enough. Agreed. Well, I look at. I mean, if we're going off of the price, off of it, because we're tagged to that Gulf Price Index.
No,
As
but Chike, be real. Jamaica is a different place compared to a USA where people are not afraid to buy spending $50,000 US on a Amazon versus Jamaica where if you see a Massey or a garden at $500, $2,000 or $2,000, you're gonna get scared or you say it doesn't make any sense.
true,
Well,
which is why $1.3 billion ran after Spur tree at $1 and $1.50. Yeah, whatever.
yeah.
One.
No,
So
$1 straight, but Chike, be real. Money's being made. And that's just the
No,
reality.
I'm not disputing that at all. I'm just saying it's cheap, so of course money's gonna run after it because the lower the price, I have more to gain if I can get more units and sell those off. And you gave
well, I
the
mean,
example properly. $1 to $3.50 is 250% gain, right?
But
well,
Jermaine,
people
can you highlight
invest to make
Delton's
money, right? So
can you highlight Delton's message about the Beachwood?
yeah, I mean, um, wait, isn't Beach when is Beachwood going to start reflecting on? It should start
It's
reflecting
already
on the next
started. It's
financial.
already started. We just haven't seen it until February comes because
Okay.
remember that they opened in
Oh,
November, which should have been middle of their third quarter. So we're gonna see that
okay. So
impact.
I'm definitely going to be. Well, okay. Disclaimer for me, I'm still holding Fesco from about $1. So I mean, I'm if it has potential, I'm good with that.
See, Delton
I'm good with that.
pointed it out. Delton shows that they had basically 2 months of operating performance for the quarter. Call it 2 to 3 months. And then we're already going to see reflected in the third quarter results, along with the quote unquote, no, we want to see seen a lockdown impact within these results. And then on top of that, you're going into the third quarter, and
So what do you think the ceiling is for a stock like this for 2021, David?
well,
Or what would you
let,
like to see?
no, okay,
Let
so
us
okay.
let us phrase it that way.
Okay,
What would you like to see?
let me break it down. So let us say under a current situation that the Fesco doesn't add any more. Fesco doesn't add any more gas stations for the rest of the year and sticks to their Mr. Breakfast and their other gas stations, including their new Beachwood Avenue gas station. Then, based on the sentiment that's going on in the environment and everything, Fesco might have the potential to go to $6 based on what I see and interpret from the environment. Note, it isn't necessarily what it should go to, but I expect the environment to treat
Yeah,
it
man.
to
Yeah, man.
because
Yeah, man. Yeah, man. That's the key. I think. Smith is saying that just so and Chike is kind of saying it to the appearance of cheap. So cheap in dollar value to a lot of investors mean cheap, and so okay, I can get more of this. I'm gonna buy more. 3 to 4 doesn't seem like such a big stretch. It's easy for us to gain
liquid,
$1.
and because of that, it's liquid, so it's easy to move. I mean,
Yeah,
this
I
is what
mean
it
it
is. I can't knock
it it also provides a great opportunity to trade. I think based on
That's what
it
liquidity.
yeah,
does.
yeah,
But
yeah.
that's
All right.
a bit of the market. You're making money.
All right. All right. So let me just get some of the comments here. Yeah. So I agree with Delton first of all. So PE goes down two ways. Either price goes down or earnings continue to go up.
Increases.
That's
Goes
how
up.
PE goes down. So
So can you highlight his comment so people can see it with respect to Beachwood? I was gonna answer and say that the PE should go down under the circumstances that Beachwood is profitable. But I don't think
yeah, I
that's the
think it will
case.
as well. I
I
think
don't
it
think
will
that's the
as well.
case because it's like technically a new gas station. I say building traffic.
Yeah, I think so as well. All right, so Tatiana is saying she doesn't get Chike's argument. So insiders have bought a lot of shares over the period. So is he saying cheap? Oh,
It was answered afterwards. It actually was answered afterwards. In appearance to be cheap. Of it, it came out at $1. The cost of it would appear to be cheap, basically. But when you look on it in comparison, had a high PE, high price to book, etc. But guess what? It only cost $1. People could hang their hat very easily, So we went after it, and people made money.
Yeah.
It's just good business. Right?
All right, so I want somebody to do me a favor. Write in the comments below the video. I feel like I shouldn't do this, but I was gonna say somebody write in the comments below the video. Can Fesco reach $6 this year? And let's see how many likes that comment gets. I just want to do like a little informal poll. So just write it under the video, and persons can like or dislike. Like it if you agree, dislike if you don't think so. All right.
Yeah, but the reality is our market just generally likes companies that don't generally pass the 3-figure threshold.
Thank you very much.
Yeah.
We're being real, but at the same time, let's make money. So there's no need to be against it.
Yeah. All right. What's the next one? Chike, third pick.
All right. So third pick, and my last one
again.
Yeah, actually, no. Let me go left field with this one. It was gonna be food, but it's all right. I must switch it up. And the reason being because I believe they had a good Christmas year.
Write it below the video, please. Not in the live chat. Type it below the video. All right.
Yeah. So what I believe the next one is that I want to be looking on Fontana.
Yeah, man.
Okay. So I can actually get on board with that one. I agree. I think actually if you're interested in Fontana, now would be a good time, right? Because the Christmas season is supposedly their best queue, right? That and summer.
Mm-hmm.
So,
and trust me, before the Christmas season, that company was loaded. I mean, their margins were nice. Their cash was, yeah, it was nice. It was nice, and their financial year in June actually for their balance sheet side had really improved very nicely compared to
I think
compared to 2020.
I'm suffering from a mental block personally for Fontana.
Why is that?
You know when you've bought a stock and you exit, it's hard to go back in. That thing, and it's weird. It's
You're the one.
weird.
You're the one
I
that
know.
basically
I know.
spoke me
I
into
know.
not going back into
I know.
Fontana, but in that general premise that if the
Yeah.
but we did that, already. We've had companies where we sold everything,
I
and
know.
because they dropped
It's just
back,
weird. It's just
into
weird.
what we felt was reasonable fundamental value that was undervalued. We bought it back
Yeah.
again, and it went up further. And we made
Yep.
our change and
Yep.
came back out again. And here we go. Here is Fontana. Run up to 8, back to 7. As a matter of fact, got all the way back to 7, right?
6 actually. 6 during the
6.
period.
Is that
They
6?
went down to 6. Interesting.
Fontana was up 31.98% last year.
Yeah, it's
it went down
November
to
17, right?
650.
November 17.
Nice.
That week went all the way down to $6.50.
650. Yeah. So here's the
Yeah.
thing. I think for me, I'm looking at you know what? I like the company. I really do. I like the company. So all right, do we look at their financials, or I mean, I think everybody kind of understands the business model already.
I think most people understand the business model. I mean, as I said, their financial year for it's not coming out anytime. They have only their stuff for the quarter so far. But I mean, I liked everything. They lit up my board in terms of where they were going across the board.
All right, so
The
go ahead
only
and
thing,
share that.
let me bring that up 1 second.
Yeah. So you guys are gonna make me add a lot of stocks to my list after this video.
No, you're not.
No,
if you're not already in it, you should have already made these picks already, as far as I'm concerned.
No, I haven't done my rebalancing yet. I'm gonna do it throughout the course of the month.
So Cheeky,
This was Fontana.
Jermaine,
Yeah.
can I just answer this question that Tatiana put in about Wigton?
Yeah, man.
So
I saw it too. Yeah, go ahead.
He told me not to talk about them, but I still hold them. I'll talk about Wigton.
Seriously, Cheeky?
enjoy your
Yes, I do.
dividend, Cheeky. Enjoy your dividend, Cheeky. Enjoy your dividend.
Remember, we are supposed to be investors. When one set is up, another set is down. We can't have all winners, So I'm quite comfortable.
Cheeky. All right.
Let me tell you.
Okay.
See what I was saying.
Somebody else help me out here. Another comment under the video. Ask the question: are you still holding Fontana from IPO? Like it if you are, dislike it if you're not.
I wish I got that benefit.
I would love to see. I doubt most, because guess what? Anybody who's holding it.
Cedric screened my application back in 2018, 2019. They screened my application, so I didn't get into Fontana's IPO, which I'm still not ticked up about. But
same. Actually, I first bought Fontana at around $3, and I sold it around $7. So I mean,
there you go.
Can't complain. You still make money.
Yeah,
that's right. I mean, so as I said, I've got them for the financial year that they ended, which was in June for 2021. This is the balance sheet.
Zoom into that some more. Can't say it. Zoom in a little bit more.
Just the ratios.
Yeah, that's good.
So like the ratios and stuff like that, they were pretty much going. So everybody should have recognized what is going on here. If you're in blue, you're good. If you're red, that's something that is not good. And if you're yellow, it's cautionary. So I mean, as I was looking on them, they were improving. Now the charts do a better job, right? So their charts.
Yeah, go ahead. Can I scroll back up? I saw something with the debt, and I was like, what? So with respect to the total, can you scroll back to further? I saw something else with respect to debt, and I was like, what is that? No,
total debt?
Not there. Scroll back a little more. Something around total, something with debt. I think I saw 700 something around there. 796.
Long-term debt.
Yeah.
Long-term debt.
I came back at the financials. that is the non-current portion of the lease liability. That isn't necessarily debt though.
Well, I threw it in there because it was so when I pulled the financial statement, this is literally the financial statement of itself. The line items of itself, I just dropped them on.
No, but that's just a bit cheeky. It says lease liability. It did not say long-term debt. That's why it kind of popped out at me immediately.
They have to pay it, don't?
It's a future liability that's amortized over time.
Well, it's non-current.
It's not necessarily debt though. That's why it kind of came off as different because it kind of skews your analysis in one sense.
Well, if we're taking out again, I'm keeping it simple. Everybody who's going to be doing simple, straightforward accounting, assets minus liabilities equals equity. Non-current liabilities plus current liabilities equal total liabilities. The number figure that they have, and as I said, I just pulled it out. The total number figure that they had for non-current liabilities was 954 million. So that basically made up whatever it made up there. So it was just adding it back up. Whether or not they pay it over time or so forth on the balance sheet, in order to do my calculations, I had to take those figures as they were, as they are.
Why you never put the line though, cheeky? That's what I'm asking.
I guess I'll do it. I can do it later on.
No, can I think about it? When first I look at it, so let me share my screen, right? Let me share my screen.
Yeah, man.
And so you can see it, and then because the thing is, persons might have seen it and think something else, so that is why I just discussing it.
Remember to zoom in, yeah.
And I'm zooming in, so you can see it here. What I was speaking about.
Yeah, I can't see.
Non-current liabilities.
Let me zoom in further.
Yes, please.
Right, where it says non-current portion of lease liability.
Yeah, and that's just because of our accounting. But this is a debt though, which is bank loans, and you have the current portion right here, and you have the non-current portion right here.
Notice it still has to get, even though it's getting paid over time. When you do the calculations, though, I mean, again, the person who is way more skilled than I am, of course, they're going to just take out what portion is current, right? So that would be basically what the difference between these two that are there. But again, as I said, I'm calculating exactly what is supposed to be what the balance sheet says: total liabilities versus total assets.
No, I'm not disputing that in cheeky. I'm not disputing that in a cheeky. I'm talking about how you actually put it into your spreadsheet. It actually skews what you would. So you put total debt as for non-current portion liability at $76 million, and that's what I was pointing out.
No, total debt was 711. Go back on that sheet for a second. That is total debt, right? Total debt.
Debt is, in this case, will be bank loans and current portion of bank loans. The lease liability is just it's not necessarily a debt in that sense. It's where IFRS 17 changed the way how you accounted for lease obligations.
Get you. Hold on a second though. When you do a calculation of debt to equity ratios, what am I doing? Am I not going to be picking out the number that is here?
You're going to include it, cheeky. Right. And I think key in the point out was that when you put it into your spreadsheet, it changes the interpretation.
Oh, I get you.
As I keep pointing out.
Yeah, I get you. Well, I have to do it differently then, because from how I did it, I just plucked out everything and just regurgitated it back onto the sheet accordingly and just labeled it that. So,
and let me answer this question from Delton about Waterloo. Waterloo has been one of their star performers in the sense that it has accelerated, or as you would say, made the balance sheet, or the income statement and balance sheet very fat.
Yeah.
Because Fontana in the first 6 months of Fontana's 2021 financial year, they were able to do more net profit than the entire 2020 financial year, which was basically affected by COVID for 3 months. So that tells you that what Waterloo really is giving some strength into the business.
All right. I really like Fontana as well. I'm gonna get over that hurdle and find a entry point. gonna find
So
a good entry point. Let me see where it's been trading.
what Delton asking about how will the promo location impact them? If we're to go back, and this is what I'm calling just from the past, discuss the future, then what potentially could expect is that Fontana's Waterloo opening will impact the expense area, which might drag down profitability in the short term, meaning less than a year. But once you try to pick up with that location, you're going to see income statement and everything will pick up much faster.
Yeah.
Because that's Fontana initially, in the sense that their Waterloo location additional expenses, but once traffic has to be centered around the location, I think you really start to see the income statement benefit from that new location.
Yeah. So I mean, so put it this way: if you know that it's gonna be opened in late 2022, 2023, you have opportunity now. That's all we'll say. If you think it'll be a favorable outcome. All right, guys. I want us to get in at least 5 picks each. So let's
right.
get the ball rolling, David. What's your third?
I was gonna say Spur Tree. That been listed as it.
Seriously? How are you going to sell your
It's gonna have
5,000 units?
IPO pop. But I mean, fundamentally though, based on the company of itself, though, they have a lot of wind. They got so much wind in their sales. Like they have no tax to pay. That's the first biggest thing. That's $21 million.
They have no debt after
Right.
this. On top of that,
no debt, no tax, and they could easily come back to the market again.
And on top of that, you're talking about a company. Well, not necessarily cheaper. Remember, they're going for $335 million. So they won't have much share capital room left to increase under the JSC's junior market rule, which is $500 million share cap.
True. 200. So that means 200 million.
What I was going to point out as well.
Them could have raised 500 million then.
Easily, but let me expand a little further on top of that then. So for one, you have the no tax, you have the no debt, and
no tax, no debt.
I was going to point out that you have 90% of your sales in the foreign market. So you're basically earning USD, you're putting in JMD. The JMD is depreciating more against the USD. The BOJ has come in twice within the last 2 days with interventions. So
inclusive of today, is it? Or yesterday?
It was yesterday and today, and that's the basically I'm pointing out. And the Spirit you can literally sell a little more extra volume, but it does depreciate by a particular amount. Then it's an entirely different story for the reporting on the financials. And the thing is, company wants more factory space. There's a quite exotic spices in St. Thomas to which is only when a few companies in Jamaica can actually export ackee. So there's a lot of positive space for them, and the thing is, when they find new additional space to lease or something else, then I'm a very beautiful light.
I still don't like companies that come off IPO to talk about them as a pick. So henceforth, I always remove IPO companies because they got wind of their sales money. However, based on their financials before winding their sales money, which is the IPO money, that company was doing well. That company was doing really well for the last 2 years, basically, in terms of revenue growth, etc. So henceforth, they have to go on the list. That's true. So let's see what happens.
We should be finding out the allocations this week, right? By Friday, because that would be 6 days.
Well, 6 calendar days or 6 business days?
It didn't say. It just said 6 days.
So the thing is, it could even come out tomorrow.
Next week, Monday latest. Yeah.
Jamie, we don't know when to be listed. So for those who don't know,
hopefully in January.
No, but let me just explain something. So for transparency, although a company might earn the amount of money they require from the enlisting and pass the minimum requirements listed in the prospectus, they at the same time would need to be approved by the Jamaica Stock Exchange listing committee. And you can check the JC's annual report to see which who make the committee. So after the committee says, hey, green lights can go through and the money has been refunded as well, the company will be listed. So once basic allocation comes out late within the next 5 days, as I'm saying, within that time frame, then you can expect it to the month within January. It should be listed, and they're giving. And Jeremy did that video less than 2 days ago, a couple days ago, explaining the training time and everything. So based off of that, it go. But at the same time, the offer has been closed. They're going to do the base allotment, refund the money, and wait for the JSC to approve it to greenlight the listing, or the JSC listing committee, I should say. So we don't already be listed, because the thing is, the JSC will tell the brokers first before they tell the public.
Yes.
But the good thing is, and this is advertising for JMMB. But the thing is, when it does list, at least an email come in the morning saying your shares have been deposited to your brokerage account. Oh, Zin, listing there. All right, and my money's in my brokerage account, refunded already.
There you go.
No complaints. All right, then buy some extra shares.
Yep.
So it's like Moneyline and JMB, to be honest. No advertisement, but I'm talking the truth, people.
Yeah. All right. So, guys, we've been running for 1 hour. If it's your first time here, welcome. We're doing a stocks to watch for 2022. So far, we've shared 3 picks each. Well, David and Chike, I haven't shared mine yet. I'm going to share mine at the end of the video, so you have to stick around. I'm going to ask you, please take a moment to like the video. There are 97 persons here. Really do appreciate it, but only 40 likes on the video. Can you please just take one brief moment, like the video? It helps us, it helps our channel. So really do appreciate it. If you missed the picks that we've shared so far, I'm going to post them all under the video at the end. And so we're talking about Spur now. They just opened their IPO, open and close within 2 days. We did a full prospectus review and, spoken about the allocation afterwards, stuff like that. So we're waiting for that notice. If you're wondering what will happen, as soon as it is published, we'll do another video again to talk about the allocation, so you don't have to worry about that. If you don't know how to invest, we have an Investing for Beginners video on this channel. Just go to the video section, look for Investing for Beginners. We have actually 3 videos to speak about investing for beginners. One by myself, one by the guys over at 876. If you haven't done so yet, check out their YouTube channel. They post some good content over there. And Andre Thompson did a trading strategies for the Jamaica Stock Exchange. Excellent overview video. So check out all 3. If you haven't done so yet, join us over Telegram. We talk stocks every day. The 3 of us are in that group. So join us over at Telegram. We also have Facebook and LinkedIn groups. If you prefer those platforms, you can ask us questions, learn about investing, get pretty much any question that you have answered. We don't just talk about stocks, just in case you're wondering. Most of us are investors in real estate, cryptocurrency, business owners, etc. Yeah. So I'm actually that's one of the things I was going to get to eventually, because I'm going to ask you both to give me a US stock pick at the end. So guys,
funny enough, I prepared for that, and I got one. I have one.
Yeah,
I was prepared, but I think I can bring up something.
Yeah, man. So we're going to share 2 more picks each locally, and then we're going to get into our US pick. Then we're going to take some questions, and so we'll go for another hour. So feel free to share the video with your friends and those who would be interested in it. Please do like the video. All right, enough of that. Back to it. So all right, Ricardo, we're going to answer that in a few minutes. All right. So what's pick number 4, guys?
Go ahead, Chike, since you be leading the charge.
All right, so I'm gonna come off of food.
Let's see if I can guess your 4th pick.
Go ahead.
You've been talking about logistics.
If I say something, you're going to immediately get it. So I will.
No, I can't guess. I was gonna say indies, but I think they're off. They're off your list, right? It is indies. There you go. I know you too well.
It's a new year. It's a new year with a whole bunch of new stuff coming on board. I mean, come on now. Yeah. I got my dividends last year. I now have the number of units I wanted to hold. Now this is a full year of holding them with doing what they do, which is, even though we had COVID going on and they had a little bit of a downturn in stuff, they still did good, right? So I still holding them to the corner that and as a matter of fact, as I said, I'm nearly sure they must be working in the background to try and get that US It
kind of feels like they lost some steam to me.
They did.
They
but
lost
they still pay the dividends though. But
I mean, the business is still operational. That's the thing. So a company, and it is one of the things that new investors may not understand. The company is still fully operational, still making money. It's just nobody's talking about them. Nothing's happening. Doesn't mean they're not, a good company to look at. So, as hoping though that some things would have worked out for them. But yeah, I'm
Two
waiting
things
to
I
see.
want to work out for them. Two things. One, they get the US patent approval, and two, the vaccine authorities give them authority for their side with Bharat Biotech.
I was going to say that, remember that Seprod and CSC are already benefiting from the vaccine rollout in Jamaica, so you can also look at it from that angle as well.
Yeah.
So in the last 3 months, it's been as low as 275 and been as high as 348. That's what, 30%?
Yep.
30-40%.
Could have made a good change.
Yep. Well, good volume too.
That's right.
Okay.
That's right.
Okay.
And then you go to dividend. Then you go to dividend yield, or should I say the dividend policy? So corporate actions. We got.
They only paid one dividend last year. What's that?
That's not a problem. That's their style.
It's one dividend, sir, but that's 11. So that's 11-cent dividend. Say everybody. So I know I got my shares were at $2. Average shares.
Yeah.
Let me see. I'll tell everybody what my average shares were.
We were talking about it from it was like what, like $2.20 or something like that.
We
were talking about it. Yeah.
So my average. My average buying is a bit high no, because in order to get up to what I wanted to get. So I was average buying is
okay, hold on. Let's probably stay away from prices. Let's stay away from talking prices. Let's just focus on the companies, because I don't want persons to think if they like the company, I don't want to dissuade them from buying thinking they're buying too high. Guys, there's no way to tell if you're buying a stock too high or not. Sure, there are certain factors like PE that you can look at, but I mean, as we've seen with Fesco, PE is not the only factor to think about. So just bear that in mind. I didn't want to confuse anybody who might be a beginner.
Yeah.
Continue.
Now I was looking at we have to put in the dividend yield. So I mean, looking at the dividend yield, still strong. Yeah. You're looking at nearly. You could be anywhere between a 3 to 4% dividend yield, pretty much for the year that they'll do. Who knows what they'll do this year, based on what is going on with everything with them. So we'll see. So I mean, that's my next pick.
July was good times, 390.
Yeah,
it was rough times for others because if you're a real long-term investor, you're going to hold through that, or you're going to chop your losses quickly.
Yeah. Imagine the person who bought at 390. And then you're at 275.
Well, we don't talk about that because that's relative. Because that is the example you definitely don't want to use about price. Because then there are a whole bunch of examples like that of persons who bought at what could be considered extremely high prices to watch the stock price plummet down. Yeah, that whole is we don't want to give anybody indigestion, so we'll leave it.
Yeah, man. Got you. All right. All right. I see a question. So we're gonna get to the questions soon, guys. So keep them coming, keep posting them, and we'll answer them shortly. David, Europe, what's number 4?
Number 4 will be JMT, and indirectly its spin-off subsidiary, which is gonna get listed.
Thank you, Caribbean Dreams. Now that I actually told Jermaine about. We were talking about it in our group 2 days ago. You see, Spur Tree, as big as Spur Tree is what everybody was talking about, that is the IPO that I am looking at. That is the one I care about a lot. That manufacturing spin-off, yes, that I care about.
So let me just expound.
Yes, please. You know what? I'm giving you even the main screen to go ahead, sir.
Give me a second. Let me just get to my business notes.
Yeah, well.
All right. So for those who don't know, Jamaica Teas is at this point a holding company for a variety of subsidiaries. So one of their main businesses is just the primary business, the manufacturing and distribution of teas, basically, or just the manufacturing of teas. And 60% of those sales are actually from overseas and from exports. So although they do sales in Jamaica, most of their income comes from export business, which is a strong moat and kind of gives that diversification and that non-localized exposure, in essence, for one market. And they spun off their subsidiary into a new subsidiary called Caribbean Dreams Foods Limited. She continues the manufacturing business, and they're planning to IPO that business within this year on the main market of the JSE, which means that they'll be trying to raise at least $500 million. Then they also have an investment subsidiary called QWI Investments Limited. And for those, I'm going to share my screen to share my business notes from last week to show you what happened with respect to Jamaica Teas and QWI. Can you see my screen now, Jermaine?
Make it a little bigger.
Yeah. Zoom in a little bit more.
All right, sure. I wish you could get to these as
we're
next
good.
to my
We're good.
screen, but yeah. So right here, I showed the JSE reposted it by accident. I don't know if it's by accident or there's a double posting, but JMT purchased 45,998,918 shares of QWI between December 13 and 16 for $39.7 million. They bought the 40 million plus unit from NCB. I don't know where they bought the other 5 million units from, but who cares? So this indirectly, in turn, increases their overall exposure to QWI 43.6588%. And the funny thing about this for JMT is that they'd have listed this company at $25, $35. The company's net asset value is $41, but yet they're buying this company back at around 90 cents or even up to $1, which is insane. So your subsidiary is listed, you're increasing your ownership back in the company for a literal discount.
Mm-hmm.
And then the company will be completing later this year its new development on Red Hills. And that's one of the things that JMT does as well, the real estate. So you're going to see that improvement on the income statement as well. When the real estate sales come through, everything is signed off. And then you also have to remember that JMT has a small supermarket subsidiary as well, nothing major. But hey, it's a subsidiary and it does the job.
It sounds like we need a full stock review for JMT. So yeah,
it's a very large company when you look at it from the exposure. And the thing is, they just stole Dynamic Bennett from Salada for Caribbean Dreams Foods. So that kind of tells you that they're really gunning for Caribbean Dreams Foods in the next 2 to 3 years, because when she came with the Salada, you saw the impact.
Jamaica
And the funniest thing
Limited.
Yeah. You know, the interesting thing is I had foregone Salada, but Salada was actually like it's one of my also run picks, but yeah.
But still, like I said, all the moves they're making are pretty good and forward looking, because the thing is, once the market doesn't collapse again, QWI won't negatively impact the income statement. And at the same time, they seem to buy back the company up to 50% at a massive discount. And the team is investing pretty good on the US market, has a couple option contracts as well. So, you're in a good position. When Caribbean gets that new money to expand the business and, get other benefits from their other potential plans along with the real estate business, there's no stopping them at this point,
Yeah.
So that's a good thing for Jamaican teas, in the sense that they set out a tea business in the manufacture and export to the country, a little bit of sales in Jamaica, went into real estate, went into investments, and just keep branching the company further and further, building up their different subsidiaries, different moats, and just using the stock market as well. Also get capital to further expand the subsidiaries and in turn expand their own balance sheet. So it's a very good business to look at, and the thing is, you can't ignore it. JMT was a very strong performer last year in 2020, and you still have to look at it going forward now.
Yeah.
Agreed.
Okay, interesting. All right, guys, I'm gonna pause here again. Ask you just briefly, guys, we have 115 persons here. Can you just
Very
take
good
one
stuff.
moment and like the video? Please like the video. Help us out in that way, especially if you're finding value from these picks. All right. So Jamty is one of those companies I like as well. So I'm on board with you guys there. All right. So what's pick number 5, Chike?
So my last pick, I guess, based on where we're at in time, is one that popped. And I told David about this. I told you about it. Me and David had an extensive talk about it. And it's off everybody's radar. But when it popped, it was on everybody's radar. AMG Packaging.
Yeah. So here's the thing. Chike talked in the group about AMG like what 6-7 months ago. As like, dude, nobody's interested in that company.
158. At 158 specifically, that
Yeah.
was the price. Yeah.
All right.
And and just so that everybody's clear on the fact that we're not talking about price alone. When David and I spoke on the company, I was telling David that understandably, yes, what was going on with the market. And back again, here we are with food as an outlier because they make the packaging, the boxes and so forth.
Yeah.
And they were setting themselves up pretty nicely as for the distribution of those cardboard packages, and so forth. And when you looked on their financials, it was just nicely coming together. And I said to David, I was like, this company, in my opinion, they were undervalued intrinsically, and I just like them. And I was like, listen, I'm taking a stake in this one. This one has to go. And guess what?
Yeah.
They popped off. Then we have a dividend policy discussion that they said. And what did we have 2 days ago? 2 days ago, they've just put out that they're going to have a dividend policy meeting on 12th
A dividend
of January.
meeting. That's a dividend
Dividend
policy.
meeting.
Cheeky.
Not a policy, sorry. Dividend meeting. That company hasn't paid. When is the last time they paid? Go back to corporate actions. Let's see when is the last time they paid.
2019, I think.
Okay then. Cool, good stuff.
And it was just 2 cents, but before that in 2017 they paid a 42 cent.
For context, please.
Yes, context is very important.
Yes,
They had a 10-to-1 stock split, so because of that, that is why that looks abnormal. So
okay. Yeah, thank you. Okay. Oh yes, stock split 2017. The next thing that everybody loves in our local market, stock splits.
The price gets cheap. That's what they call it.
But it's again, see, yes. But yeah, they're my next one. Yeah.
All right, AMG. Let's see. All right, so I'm honestly, yeah, okay. You'll have to talk about that one, Cheeky. I'm not. Yeah.
When all right, let me do the share because this would be better to.
Yeah, please share because I don't think I've looked into them at all. So go ahead. All
right. So when David and I spoke about them, I had just basically finished charting them for the year, for their period of August 2021. Again, we know that. So this is the wrong one. Let's not look on that sheet first. This is the financials for the company. So they were actually getting way better from the previous year, August 2021, coming over to, August 2020 to August 2021. So a couple little slippages there, but not anything that I was concerning myself about. Everybody, they were their best time, and I think that's because they were setting themselves up for what they were doing in terms of ensuring their expansion of the warehouse, etc. They had their cash, so there's their cash ratio, which was blue, and then of course they deployed the cash and so forth. So now, as the cash is now deployed, it's now time to reap some profit. So that brings us over to this. So at that point for the company, let's go at net profits. So their net profit has been steadily increasing. And with that being said, as I said, my buying price at the time, which is when I found them as being undervalued, was $1.58. That's pretty much when I bought into them. We're at $2.20 now. We've got dividend talks. So, I mean, their stuff for me personally. I love the company in terms. I've liked them from day one since they got rid of their toilet paper arm that wasn't doing well, right? and I was like, they were one to watch, and then I decided, no man, this is now the right time to step in because it's coming there. Gross profit margins, they've always kept it consistent in the plus 20% gross profit. Operating profit margins could be better, but it's still against my threshold, pretty nice in not single digits, but it's high single digits, says eight and above. Could be actually better. And then we need to see the ratio. So what ratio are we looking on here? The next ratio is, let me bring this, I need to bring this down a little bit so that we can actually see. Yeah, a bit. So things like their inventory turnover, like the 2020 year, they were turning over inventory at least like 6 times. 2021 was 3 times, right? This is a very, very important thing for me. So like the interest expense ratios, the amount of times their ability to pay their debt, this really based on the calculations only now came on the radar for me. And the fact of the matter is that they can pay their debt 6 times over. Pretty much, yeah. I'm liking how they've set themselves up from 2020 going into 2021, and here we are with dividend policies. And here we go about, I mean, the other things that are there, sales, free cash, their free cash flow, they deployed everything pretty much, so it's gone into a negative, and that's fine for me because 3 years before that, they were basically slowly building up to make sure that they could do their expansion and so forth. If you take a look at the company financials, you'll see it had to be plowed into expansion of the warehousing, etc., machinery and so forth. So for me personally, yeah, this was just like how I had my dark horse, as I called it, with indies. What was it? 2019? Was it 2019 that I said it? No, it
Yeah,
was
man.
20,
Yeah, man.
2020.
Yeah, it was
2019,
a while
right?
back. Yeah.
Yeah. So this became my dark horse, basically, in terms of jumping out, and they did just that. I mean, so let's see where they go from here, basically.
Yeah. Well, I mean, so well, no, well, Tatiana, we'll get to Q&A soon. We're just gonna take David's final pick. I think I'll share just 2 picks. Because I mean, there's just one company that I really like that I haven't really. Yeah, David, go ahead.
All right. So I was gonna say CPJ.
The
Interesting.
spot that had made everybody happy last year.
No, and aside from that angle, the company has the good thing with COVID. And for those who wondering, CPJ's Caribbean producer Jamaica Limited. The good thing with COVID is that companies were forced to become efficient,
Yep.
and
Yep.
and that and that has really manifested in CPJ pretty well, in the sense that the company is
So
profitable
you think that
again, but at the
after
same
all the
time,
growth they've seen, that there's still potential?
there's still potential for 2
Companies
reasons.
always have potential.
But for 2
Tourism is
reasons,
not up there as yet. Yeah.
You understand what I mean, sir? You
no,
understand
for no, no, so
every company has potential in that regard, sir.
for 2 reasons. One, the company uh is saving at least 600 grand per month extra US in expenses, and on top of that, they really went heavy for tourism during this period. They're expanding the Montego Bay retail outlet, and on top of that, tourism is still below prior levels in compared to
Correct.
prior. And the
That
thing
is
is,
true.
if they are more efficient in this regard and you better capital management in one aspect, they're in a very good position to really kick off
Okay.
once tourism really.
When
No,
tourism
no,
comes back, yeah, that's
no. Because the
right.
reality is
Yeah.
they had COVID in 2020, 2019 they had IT write off. You understand?
Yeah, man. Yeah, man. I
So
got you.
so
Got you.
they got that string of bad times continuously, and they were like, all right, COVID came, we have to really wake up. They moved to the main market because they say, hey, we're going to raise capital in short order to the acquisition. So they're in a better place now compared to pre-COVID, because pre-COVID, CPG had gone to like $7 as their all-time high. I was trading between like $4 and $5 for most times, and nobody looked at them. But since COVID
That's
has forced them
right.
to kind of pull their pants up, like with almost every other company,
Yeah.
they're much better light in my respect, in my eyes. Because I remember talking to a friend before COVID, he was saying CPJ, he's gonna get it because things are looking up. It's tourism year, and I was like, big man, CPJ still not appeal to me because they're not efficient in the regards I like them to be efficient in. Although I
No,
agree
they
with,
are.
although I agree with things like EBITDA as a metric for from some aspects, it's already interesting to base stuff all together. And as I said, the company is looking to to equity raise to the acquisition outside of Jamaica and further build up their presence in the region. So they're in a different position right now altogether. And if they made a profit in September, to one of the most slowest periods in their entire operations, it's pretty good.
Okay. Yeah. Yeah. Yeah.
They're one of the
And
first companies that I held when I was learning, when I was on my, I am always learning, but when I was like literal greenhorn learning, because I like them. I use their products. So at the end of the day, I
oh,
decided to look.
your packet is very nice then.
Listen,
And
I'm not gonna
and
date myself with anything, man.
and I was gonna say, I saw that Giovanni mentioned, sorry, not Giovanni, Matthew Preston mentioned, Dolphin Cove earlier, and we just took CPG with Dolphin Cove just because Dolphin Cove is in a much more precarious position, just because.
Oh yeah. Let me share that article. I can share it in the chat, right?
Yeah, shoot in the chat, man. I was gonna say that Dolphin Cove is in a more precarious position from the respect that any car can play. The tourists get their freedom, quote unquote. Yes, when it comes down to when the tourists build to the resilient corridor, but hotels are paying CPJ the money they need. At the same time, CPJ has the backing of many more persons. And as I said, Dolphin Cove is good and will benefit from the recovery of tourism, yes, but at the same time, they're in a much more precarious position when it comes down to like Omicron and everything else with respect to COVID. So there's obviously,
Question.
yeah,
But I'm going to play on the other side here. So I held Dolphin Cove before. I held Dolphin Cove when it was
So so
at all the
so
way down to
Chiche was
6.
talking about Dolphin Cove pre-COVID.
Correct.
Yeah.
And here's the deal. When we went into Dolphin Cove in COVID, I was like, this company is still good because look on the cash that they
they're
were
that much
holding.
debt. They're that much debt.
Right. What is the standard? What is the standard now for them?
I think they're at around
What
$2 million
is the
worth of
cash?
cash. $2 million. See my article. Let me check.
We're talking US here, right?
No, yeah, US. So at the end of
Okay.
And that's the
September,
next thing too.
at the end of
It's
September,
US we talking here. This
at,
this
at,
company.
at the end of September,
Because if we're
they
talking
had
2 million Jamaican dollars,
two
then I
point two
mean,
Nah,
point
yeah.
zero million USD, but they have a bank overdraft of $1.01 million US.
I
So
gotta
when
do. I gotta do a. I haven't analyzed them because again, since I let them go, I didn't. But Jeremy knows I really did like them just because they were doing things pre-COVID. That was when they were putting together Puerto Rico Beach, the park, etc. And they were just setting themselves up really nicely. Then COVID hit, and I was like, but they're still managing even through COVID,
Yeah.
and they weren't making money. They were actually doing what was required to keep when everybody was shut down. They were still doing what was required to get themselves some money coming in. Plus, they had a lot of cash. So if that really hasn't changed, and now that we're not past restrictions and stuff, but we're past lockdowns. So we passed. We're on the opening of the tourism industry, etc., and so forth. This is just extra stuff. So personally, based on what I know from them pre-COVID and in COVID, I still say that, in my opinion, I like them more with more wind in their sails if things can. Because guess what? They have a lot to lose, bro. As you rightfully said, they're in the most precarious position. But for that simple fact, when COVID was really hitting them in the first part, when everything was shut, they doubled down, they stepped up, and they did what they were supposed to do. So I mean, if I was to say that's my six pick, that would be the one. Don't hold them anymore, but yeah, I analyze them enough to believe that they can go the distance. They can take the blows and keep going the distance.
yeah,
Okay. Okay. All right. I mean, the only company that I feel compelled to talk about now, and I don't want to get into it. I'm just gonna say the name because we're gonna do a stock review soon. That's Fosrich, and I was looking at them right around the time I was doing the construction stock reviews around August of last year. I was looking at them.
Congrats.
Yeah. So I mean, I'm happy to see where it is now. So I mean, for me, I've shared this on the channel all the time. I look at the businesses first. I mean, that's kind of what we talk about in the group all day. We talk about the business, and then we try to see if the numbers justify what we're seeing, right?
Right.
But sometimes the financials you can see potential in the business, but the numbers aren't really saying it's a good buy right now. You have to buy before it's a good buy in terms of everybody's opinion, because by the time everybody's thinking about it, the price is probably
Already going up.
slightly overvalued. Yeah, because I mean, when everybody agrees on a stock, it's going to go up really fast. You want to find those companies that, as I always say, nobody is talking about. Those are the companies I look at. Nobody was talking about Fast Rich. I was happy about that. I was able to buy all I'm buying in terms of my units when nobody's saying nothing, and I was able to just do my trades that way. So I mean, if you're looking for companies, especially for those that are gonna have a great year, you want to look for those companies who, I mean, just look at the businesses first. Try to understand the businesses. That's why we do the stock reviews the way that we do them. Understand the company. Then you look at the financials, see what the market is saying about it, understand the history of the company, etc. And then you can make an investment decision when speaking to a licensed financial advisor. But that's how I do it. And I mean, David has been clear with his approach. Chike the same as well. So, all right, did everybody share their picks, right? So that was mine. We're gonna take questions now. So just note, the next segment of the video we're not going to keep. We're going to cut it. So I'm actually going to do an outro, and then we're going to take questions. So just kind of don't be weirded out by what's about to happen. All right. So I want to thank you guys for watching this video. Please remember to leave it a like. Look out for our next stock review video coming up in a couple of weeks. Please be sure to check out one of our other videos. All right. Okay, so let's take some questions. I'm gonna scroll all the way back. I think we're getting some earlier. All right. So Chike, can you explain what PE ratio is, please?
All right. So P ratio in its simplest form. The P stands for price or market price, and the E stands for the company's earnings. And what it is earnings per share, which is earnings against earnings being net profit against the total number of shares that are attributed to the shareholders, basically. And you want to use, for being very precise, you would want to use what they call the weighted average number of shares. And you also want to use the total number, which is known as the diluted shares, which includes not just the ones that are out in the market, but also inclusive of the ones that persons in the company holds, like the directors and employees, etc. At least for me, it's a better calculation.
I was just gonna say, keep it simple,
Yeah, yes, I'm keeping it simple. Yeah. So back to the price. Market P stands for market price. E stands for earnings per share. When you put the two of them together, you put the market price and you divide it by the earnings per share. You get what is known as the market price to earnings per share ratio, basically. And what that ratio tells you is, if you are about to be paying for a company that is either undervalued, in its very simplest sense, undervalued or overvalued, based on if the earnings is higher than the market price, then that's one tick against the company, towards the company, advantage that the company is at one stage undervalued, because people have not basically decided that its price is worth paying as yet the amount of earnings that it's making. On
Yeah.
the flip side, which is what we see with many companies on the Jamaica Stock Exchange, is that the market price is above the earnings, right? So henceforth, you're gonna find that that number, that ratio, the number that you get when you divide the market price to the earnings, is the number of times market price has increased over the earnings. And what that basically is saying, in a nutshell, is if you decided to pay 5 times PE for a company, then you better have done your homework because you believe that in some time in the future, the earnings of the company per share is going to come and match up to that market price of which it's 5 times. And that's where a lot of persons get burned. So that's basically in a nutshell what PE ratio is and
Well,
how to understand it.
all right. Thank you,
Can
GK.
Jeremy?
David, there was a question for you.
There are multiple questions in the chat, but all right. So with respect to 30% breaker, it's actually 30% breaker. I want to okay. Let me break it down. So the JSC, like other stock exchanges, have something called a circuit breaker, and in our case, with our market, if a stock price goes 15% above its reference price, it will be halted for an hour. After that, the stock price cannot go 15% higher from its original reference price when the day started. After that, for the rest of the day, which in essence means that no stock price can go up or down more than 30% in any given day. So other day, it was after 12 o'clock, CPJ had reached that 30% threshold, and no matter how much people were trying to like buy the stock, it wasn't just go through. And that was because since 30% mark had been reached for the day, we couldn't orders weren't being filled because of that. The
Okay.
circuit breaker exists on the markets as well, but the thing is, our one is unique in the sense that it basically constrains a stock, and when we're in a particular price range in a given day, go up or down.
Yeah,
Other
and I
markets,
was gonna say we cover that topic in length in our J Trader review video. So check that out on our channel. David explains it. We go through J Trader, help you to understand how to use it, etc.
yeah, and I was going to point out that in effect, you can use and NYC and whatever, they have circuit breakers, but they have different levels. So like 5 minutes, 15 minutes, the entire day. But at the same time, I can go up, for example, as much as 100%, 1,000% in a day versus to Jamaica where it
Persons would
is.
love that in our market.
No, trust me. I
Yeah,
mean, your circuit breaker needs to be adjusted, but that's another discussion.
That
yeah,
And
goes two ways,
definitely.
though. You know, what goes
Let,
up on the other
let,
side also
yeah,
comes down.
GK,
Anyway, we're not gonna
different
have
day,
this discussion.
different conversation. All right,
uh,
so
so I'll,
I think the
explain that.
name
I'll explain that.
is okay. All right,
Judicial.
go ahead. Yeah.
So I was on Trans Jamaican Highway. For those who are wondering, they don't just operate Highway 2000. Now, the North South Highway that was recently built, going from Caymanas to Ocho Rios, that's owned by the Chinese. Uh, Highway 2000 includes the Port Murray Causeway and the highway going from Mandela Highway all the way to Maypen. So, for context, the IP price for Trans Jamaican Highway was $1.41 JMD or a penny USD. Since then, it's traded between like around $18.30 in the last couple of weeks. So the
They
reality
pay good
is,
dividends though, so
I
I
was gonna
mean,
get
Oh
to that.
yes,
I was gonna get to that. So for
if
context,
you if you're a dividend investor, that's definitely one of those I'd look at.
and the dividend yield is gonna be proper. But anyway, David, you're gonna get to
Yeah,
it.
man.
Go ahead.
yeah. So what I was explaining was that right now the traffic is basically returning to normal levels, and the thing is, the Williams Field to the Maple Leg is being built out as well.
Yes.
Cheeky, let me finish. They had the first, they have the first right of refusal, and what that means is that they basically can choose to not be the operators that part of the highway. But the thing is, they have the capital, well, arrange capital to do it, and they're already planning some other means of building revenue other than the general highway built by the government. So, if you can see my screen now, Jermaine?
Yep.
The picture isn't clear, but sorry about that. So, with the Brenner Large development coming up in time, Trans Jamaica Highway was basically pointing out where they're planning to build to do interchange roads along the current highway into Portmore and along the Bernal Lodge area to further increase the revenue, and along the Old Harbor area as well. There's interchange roads.
which I believe is going to be easy.
So the restaurant right here in this picture is not clear, guys. Don't beat me. That's how although you can drive from point A to here for Old Harbor, the traffic is so bad. It's not doesn't make any sense. So what they were putting it was that they came into interchange road like at these points to allow for you to, instead of coming off of the highway at, for example, uh, Spanish Town Point, you can drive further, come off an interchange road, and instead of you spending 24 minutes on that part of the highway, you spend probably less than another 3 minutes on the highway or even less. So
Forecast.
so the thing is, Trying Jamaica is looking at different ways to build revenue. But at the same time, you have to remember that their biggest asset is their agreement with the government to operate the highway, which decreases as time progresses. However, in their prospectus, they highlighted their aim is to pay a sustainable or strong dividend yield to investors. So last year they
Which
paid
they have.
0.0765 in a dividend, which is around, at the time I think it was like 7% before the price went up on the hype
Still
for this
7%.
announcement. And then they paid 0.0865 this year. Sorry, 0.0748 last year, 0.0865 this year. And I think that's around like at the time before dividend price went was like $1.19, which brought us about to like around 6.5% dividend yield before withholding tax and so on. So if it is the case where you keep a capital gains I'm trying to Jamaica right now, that's a far-flung reality. I'm being honest. However,
Yeah.
if a company you're looking for dividends, then the annual dividend you're getting for that's a strong yield for a company.
7% consistently
Yeah.
for
That's
But
for
definitely not bad.
2021.
You're certainly not
Higher than
getting that in your
inflation.
savings account. So
Higher than
but
inflation. Higher
no,
than
cheeky,
higher
no
than
cheeky. Inflation is 7.8%. So let's just keep it to the generalistics I was
yeah.
explaining. So what I was explaining was that although minimize capital gains in the short term right now, the company has a decent annual dividend paid out, which compensates for that difference. What I was going to point out was that you're talking about a particular asset that is fixed. You can't take the highway up from, say, example, St. Catherine and bring it to
correct.
Montego Bay. They can't steal this. They can steal the solar panel lights, it's the battery solar panels on the highway and the lights, but they can't steal the road. So it's an asset where people are going to continue using it. When they expand that point from Williamsfield to Mapen and then, the interchange road as well, you're going to see more revenue. And the thing is, as the company continues to pay that dividend out consistently up to 2035, which is when their agreement with the government expires, you're just going to see a consistent dividend income coming to your bank account once per year at the end of each year, and you're just going to be comfortable with it. So
Yep. Yep.
capital gains are limited in essence, since their main income source is just operating and managing highways. They say that Caribbean is another avenue for them to actually look to get more capital, but at the same time they're benefiting in Jamaica in essence from all what's going on.
Yeah.
And
Yeah. Definitely.
but the question by
All right.
Dina, and the
So
question by,
yes. All. I mean, we've covered JMMB so many times here, but I mean, I think the only thing I'll say about JMMB is that I don't know when are they supposed to start doing the repurchase. I think that may be the only
April,
opportunity to see some growth
So
there.
I'll
everybody's
explain.
looking for capital gains for JMMB, because outside of that,
Mm,
just by the company, well, no, let me not say it that way. No,
All
they're
right,
a
so
good dividend company, and they
let
are
me,
good. Their tentacles are in solid revenue generation areas. The company fundamentally, financially is good. It's just that people just don't, for whatever reason, just don't want to give them the love. It's just like my company that I own, that
no,
me and
no, no,
Jeremy have
no, no, no,
logheads.
no, no
Yeah, I'm
mention
gonna put
it
it out
here. No
here.
mention.
It's gonna be
so
a mention. It's just like Sterling Investments. Here
stop.
we have another great dividend company that pays it in USD, that have their tentacles very nicely set up, but people just don't like the price. They just don't want to pay for it. Well,
Uh,
hey,
so so
that's
so so Jeremy, now let me just add to the JMB and add to the Cinco
Yeah, man,
part.
please do.
So refer to JMMB, the buyback is supposed to start on April 1, 2022, which would be their 2023 financial year. The company
Okay.
has put down 300 million Jamaican dollars already for the buyback program to be executed. And the JSE won't be an issue for them to get approval. I'm not sure about Trinidad because they also it's a national and Tobago Stock Exchange. And then on top of that, the company is looking to do acquisitions. They said that might be executed during this quarter. But at the same time, JMMB is a company that you can't ignore. I check point out there for the solid fundamentals, but the capital gains might elude you for a little bit longer. But hey, it's one of the largest companies in the JSE. You can't ignore that. So I would just say,
and we should point it out. The the share buyback favors you, the dividend investor, because when they buy back shares, that means their shares is on the market, which means that they're going to put out a better dividend.
No, wait. So what happens to the shares when they buy it back? They remove it from shares outstanding?
So let me explain that. So
please,
with the share buyback, it comes under treasury shares, which is shares of the company, and then they cancel it. So
perfect.
Let me break it down quickly. So Surgical Fashion Company, which is the associate company of JMMB, they have been buying back their shares over the last 2 years. SFC, when JMMB acquired Surgical Fashion Company, SFC, they had 22.52% of the company, and their stake now is 23.1 to 20.22% in SFC. JMMB has bought an additional share since then, but because the company has been buying back their shares and the share price has gone down, their ownership has increased indirectly without having to spend a lot more. So that's how share buyback works.
I like that.
So the buyback JMB is proposing would in turn reduce the number of shares outstanding, which would benefit dividend investors, as she pointed out, because there are fewer shares to be paid on respect to the dividend. And on top of that, it would improve the earnings per share of the company, since there would be fewer shares with respect to profits on the book.
All right, nice. All right, so go ahead with Cinco. So guys, we're gonna try and get to all of the questions. Please keep them coming. We're not gonna take any more questions. We're gonna answer all the ones that are there. And then if you're watching this on a replay, just post your question in the comments underneath the video, and we'll just do a general Q&A. Maybe in a couple of weeks to just cover that. So we can't take any more questions because we're trying to wrap up in about 10 minutes. So, but just in case we miss it, just post it in the comments and we'll get to it. All right.
So let me just break this down. So this right here is we seeing an announcement earlier today about their new distribution center in Trelawney. So for those who don't know, Wisynco's current distribution center is at their current HQ on Wisynco's HQ again. What's the name of the road? I can't remember. L.E.A.R.N Road, right? So their current center is actually in L.E.A.R.N Road, and because of that, Kingston, St. Andrews, and Catherine, whatever, Clarendon, that's close enough for them and less cost. It doesn't cost them as much in terms of distribute their goods. And Wisynco doesn't distribute their only manufactured products alone. They distribute for Creamy, for Häagen-Dazs, and several other brands. So the thing is, by establishing this center in Trelawney, which we are leasing at the moment, they in effect be able to bring down the cost to distribute goods on the western side of the island. So, and you have to also remember Wisynco is heavily involved in tourism with respect to their products like water. If you go to the hotels, they always say a water bottle or whatever. So the thing is, this announcement right now you see where they said the retrofit in the center at the current moment, should read it in the March and so on. This is the company saying, hey, we are looking to expand, and we're going to do this to expand their distribution footprint, which in turn can give Wisynco more business. Because remember, guys, a distributor is going to get from point A to point B, goes from point A to point B, but the distributor's job at the same time is to cut back on expenses. So remember, if Wisynco is being charged, it costs Wisynco, for example, let's say they get charged the company $10, and it costs Wisynco $3 to send the goods. Sorry, $5, for example, to send the goods to the other side of the island. The distribution center in that part of the island, they could in effect cut the expense down probably like say $3 to distribute those goods. So that's what this new distribution center in Trelawney is getting for Wisynco. And their current distribution center is about 200 or 300,000 square feet. So this 26,400 square feet warehouse expansion is a pretty good space for them to do what they need to do.
Okay. All right. Thank you for that, David. I mean, Peter, I think I'd say short answer. I mean, there are opportunities on both sides. Usually the smaller companies, well, not usually, the smaller companies will be on the junior side. So depending on, so for example, you see a company like Spur, you have companies like, I think, Fesco.
Growth.
So typically on the junior side, you'll see opportunities for growth. So it depends on the type of investor you are. But there are opportunities on both sides. All right.
So to point out as well, last year the junior market outperformed the main market by miles. So it was the main market, the junior market did like 25+% versus the main market, which actually had a decrease in value. And the person asking about the financial stocks,
I mean, to me,
it depends on what the company is aligned with. And let me explain why. So somebody mentioned Sinus in the chat a while ago. Sinus lends money and they lend in million US dollars. They aren't directly tied towards what you call the general economy, where their business is affected by, as you said, BOJ interest rates, regulators, and so on. So there's those kind of constraints on their business. For like an NCB or Scotia or JMMB, when the BOJ reduces their policy rate and continues to raise it, they're going to have to, in turn, potentially increase their interest rates as well on some of their products, lending products, which in turn is going to potentially decrease borrowing. So, and the thing is, when the economy is in a good place and people are spending, people are in business and whatever, they're benefiting from financial companies pretty well. Let me explain why. So, for
Right.
example, every time I swipe a card at the point of sale machine, the bank who owns that point of sale machine gets paid. When you have curfew, when you have lockdowns, when you have less commerce or activity, the banks earn less money in turn as well. And then you have to also remember that although these banks have wealth management and so on, if the stock market doesn't do as particularly well in some cases, or the bond market or whatever assets they hold on their books don't do as particularly well, it impacts your total comprehensive income, or in turn, it might affect your income statement, which is a profit or loss. So the financial stocks aren't necessarily a bad thing. I'm not avoiding them, in all honesty, but I'm deliberately choosing not to take the kind of exposure right now based on the fact that the economy is still slow. Those financial stocks took a massive decline in value. So like NCB, for example, last year, let me just look at my article I did today. NCB declined by what? 13% last year. Surgical went up 10%. Guardian, since it's done the JS, it's gone up by 11%. Barita went up that 20%. Scotia went down by 18.38%. JMB went up by this 13%, and so on and so forth. Panjam actually went down by
We
5%.
should probably have a session on just reviewing the financial sector. That might make sense,
Yeah,
because
but
I know a lot of persons probably still are holding some of those stocks in their portfolio.
well, I talked to an advisor recently. She said that, as the persons who buy into like around 200 range and so on, that they don't haven't sold. And I'm like, to be honest, if I was them, I wouldn't say I wouldn't necessarily sell. But at the same time, I'd probably take
I
a margin loan, and find the investment to make up the difference. Because
I
you just
shifted
holding
my
into it.
NCB position to another financial company, and I definitely don't regret that decision. All right,
No,
so Peter, for your question, I think you can just check the chart for that. I'll say that Kerry, the answer is yes. I'm still confident. It's
in
just gonna extend.
Carib Cement. Remember, you have to tell persons who might not know the name of the
Okay,
company.
yeah, man. So CCC is Carib Cement Company Limited. With a stock review on them earlier last year. So Kerry is probably asking if I'm still confident because of they proposed. They voted it. It's voted in now. So there's pretty much a fee. There's a royalty that's going to be collected from their top line. Investors were not happy about that. We saw the stock price go from about, I think, $110, $115 to about $70. I still like the company.
Good pick-up point, by the way.
My time horizon has pretty much gone out on it, but I'm still holding the company. And we spoke about it in the group. If it is that the paths that I see for it still work out for me in the long run. So I'm good with that. Views on Mailpack. Mailpack, I think their last quarter for last year is not going to be as good as it was the year before. So I think you're kind of seeing that sentiment on the market in terms of investors. I do like the company personally. They're still on my watch list. I'm actually still a shareholder. So I'm bullish on them long term. So it is that's my personal views. And sorry guys, I'm just kind of stealing some of the questions so that we can get through them.
So Jermaine, I just want to add a Mailpack. Mailpack is basically slowing down at the current moment because spending for this Christmas period actually decrease, and on top of that, people are not spending that much online to bring goods into Jamaica. So that's where you kind of have to remember.
I'm kind of waiting to see how they close last year because again, thinking that last quarter would be their best one.
It's always the best quarter. It's always the best quarter, but as I said, the demand has slowed down for them. That's
definitely.
The shipping crisis must have put a proper dent in all of that.
No. Yeah. That's okay. They do the air freight unnecessarily.
I know they do air freight, but still.
Yeah. No. I get what you're saying, but remember, the sea freight problem only impacts the end consumer with respect to the good they purchase online in one sense, but it's affect Mailpack from bringing it from point A to point B. Only thing everybody's made back in point A to point B is like last in 2020 when I had to charter a plane to bring goods in on time for customers to get them by Christmas. And
let's see.
I'll do this for you right now, Jermaine.
Yeah, man. I was literally going to ask you to do that. So thank you for that.
And while David does that, I'll just put out the only thing, because you did ask about it in terms of an overseas stock. Guess what I'm going to pick? I'm going to pick the one that has everybody piled up. Well, we didn't pile up this year because COVID. But my overseas pick, PriceSmart.
Okay.
Portmore opening shortly.
Ding, ding, ding. That's exactly why.
Nice.
Oh, yeah.
All right. So
let me just show the person was asking.
Please.
So
go ahead.
There are two ways. So I just saw market data. So for one, you can go from the home page of the JSC, just scroll down, and you just press this arrow right here to go to combined market and view summary. And you'll get this report right here, which basically shows stocks advancing by the volume, price change, stocks declining down here, stocks trading firm, and you get the general breakdown right here, which is the largest volume movers and whatever, how many stocks advanced, how many declined, how many traded firm. And then you can go to market data, which is, if you're coming from the home page, you're seeing right here, it's right here as well. Then you just scroll down, then you see market summary. You can press it here. And for example, you press a company like 1834 Investments Limited, and trading information comes up, which is what Jermaine was showing earlier. So as you can see, the stock price movement from a line chart perspective, the candlestick chart, the OHLC chart, and you see other information right here. Today's range shows the price range of the stock during the day. The last traded price is the last price that was traded for the stock. The 2-week range is basically a year, and then the volume, and then what's going on since the year. So I said the market cap, which is market value of shares outstanding, and let us say you want to go up and carry cement. If you know the ticker, the symbol, in this case, which is CTC, within CTC in the URL, you scroll down, and you see the in this case, carry cement come up. So, as I mentioned earlier, you can go from the home page and just press view summary, and go to market data and press market summary. And if you're in this trading information page right here, or instrument summary, all you have to do is basically just if you want, you can put in the ticker right here, or if you want, you can just scroll on right here and change the different company you want to look at and press go. And that's how you manipulate your own market data to see this information that you, in this case, would probably want to view.
All right. Thank you so much, David. And Shanice is in our Telegram group as well. So if that's not clear, just let us know. All right, I think we got everything. So Don, I'm hoping that you're in our Telegram group. I think we can answer. So for all of the questions that we haven't gotten to answer, we'll try to answer them in the Telegram group. So please join us there. Guys, thank you so much. Really think this was a good video to start off the year. We'll try to track these picks throughout the year, maybe do a monthly update. But we're going to be doing
Quarterly.
a stocks watch every quarter. Yeah. So let's do quarterly. So at the quarter, we'll just kind of recap how the stock has been doing, see whether or not we're changing our picks, etc. And then we just have it unlocked that way. I want to thank everybody for being here. This was definitely a good session. Thank you so much. We have other stocks to watch videos that you can check out. We do stock reviews, we do IPO reviews, just about anything that you'd be interested in as it relates to stocks. We do cover other topics though. As I said before, we're going to have an investment class coming out on March the 5th. Stay tuned to that one. It's going to be a free class. If there are any mods in the chat, please share the Telegram link, please. But check the description of the video. It might be in there as well. Or check any social media profile. It should be there. I think that's it. All right, so guys, thank you so much. And let's continue this conversation in the Telegram group. Join us there. And any closing comments, guys, before I...
Do your homework.
Yes.
Simple as
yes.
that.
Please.
Well,
so everything that we said
this
here
year, do your homework.
Yeah. Everything that we said here was not financial advice, just for your entertainment. So if you're interested in any company, just research. We show you how to do that here. And yeah, just stay tuned for that free class. And I can't think of anything else. Please like the video. Please like the video. It greatly helps us. We're trying to grow as a community. So when you like the video, it tells YouTube that this content is good, and so it will show it to more people. All right. So for the Telegram link, mods, someone please share it. If not, let me try and share it now. I don't think I've seen anyone respond. All right, here you go. I've just posted it, so you can use that to join. But as I said, it's in the description as well, so you can ask any questions there. For any question we missed, just please post it in the Telegram group, and we'll get to it. Thank you guys so much. Enjoy the rest of your day, and we will see you in the next video.
Okay, take care.
All right. All right, guys, thank you so much. That was a very, very good session. As I said, unfortunately, we're going to have to remove this Q&A section. So I'll leave it up for a little bit, maybe a couple of days, but we're trying not to have a lengthy video. So the stocks to watch session was 90 minutes and the Q&A is about 40 minutes. So that would be over 2 hours. Most persons are not going to click on a 2-hour video. So I'm going to trim it off maybe by about Saturday or Sunday. So if you want to catch the replay, the Q&A, feel free to check it out within the next couple of days, but then we're going to shorten the video. All right. Please enjoy the rest of your day, and I'll see you in the next one.